devaluation in the sleeper market is in full swing. The increase in new truck deliveries that started in mid-2014 has finally resulted in a critical mass of trade-ins. This volume increase has been represented mainly by 3 specific models. During this period, the freight environment turned moderately negative as businesses worked through an excess inventory of goods ordered earlier in the year. This decreased need for freight negatively impacted demand for late model used trucks to an extent. Due to these factors, auction pricing fell dramatically from August to October. Models with a historically strong pricing performance fell roughly 15% during this period, and models with historically weaker performance fell much greater, over 30%. With wholesale devaluation underway, we predicted that retail pricing would follow suit. Through September, the impact was not yet felt to a great extent, although the 3 to 5-year-old cohort did fall by a higher than usual 4%. We're somewhat surprised that incoming October retail data points to another month of mild retail depreciation at less than 2% on average. Even the models most heavily impacted by the supply increase have not yet seen retail depreciation on par with wholesale. However, retail sales volume for 3 to 5-year-old trucks dropped notably in September, down almost 30% compared to August. With wholesale pricing dropping so dramatically, prospective retail customers are finding they have much less equity in their trucks than they did just a few months ago. As such, it is much more difficult to make a deal happen. This factor is a likely reason for the drop in retail sales. Further, a dealer who's having trouble selling trucks retail will move more trucks through wholesale channels, exacerbating the supply situation. Given the vast majority of fleets are on a 3 to 5 year trade cycle, and we know the build rate of 2011 to 2013 model year trucks, we have a feel for what kind of volume to expect going forward. Whereas the 3 to 5-year-old truck in 2014 was represented by the 2010 to 2012 model years, that same cohort in 2015 is represented by the 2011 to 2013 model years. This change represents a 27% increase in the number of trucks of typical trade-in age in 2015. In 2016, we can expect another 13% increase on top of that. In sum, it now appears that the critical mass of sleeper inventory was reached mid-year. As of early November, the most notable impact to pricing is still through the auction channels. Retail pricing for the stronger of these models has not yet been impacted to the same degree. Other models have also seen a less drastic devaluation in wholesale and retail channels. Unfortunately, until the economy works its way through the excess inventory of goods, freight demand will remain at current levels. As such, we expect pricing conditions to remain consistent until the second quarter of 2016. For the most current data on this, as well as other segments, be sure to check our commercial truck blog twice per week at www.nada.com/B2B.